Good morning. These are the things that matter most in Europe's market today. Nvidia is still selling more shovels than ever in the AI gold rush. A Chinese AI model is running only on Chinese chips. China's industrial profit growth has cooled to the slowest pace in 7 months, and U.S. policy noise is again touching the Fed. The Europe question is not whether AI demand exists. The question is whether Europe owns the trusted control points, while China-linked cyclicals and rate-sensitive banks absorb the macro shock. Start with AI infrastructure. CNBC's Daily Open framed Nvidia as selling more shovels than ever in the AI gold rush. Investing.com reported that Asian chip stocks were mixed after Nvidia results, even as AI spending remained strong. For Europe, that keeps the spotlight on ASML, ASM International, and B Semiconductor. The cleaner side is equipment demand if global AI capex stays real. The pressure point is valuation and China exposure if investors decide that the next AI winners are not just demand winners, but control point winners. That is where Z.AI matters. CNBC reported that Z.AI shares rose after releasing a new AI model running only on Chinese chips. The hidden mechanism for Europe is that AI demand can grow while supply chains fragment. If China proves more domestic AI capability, European equipment, software, and industrial automation may still benefit, but the pricing of export controls becomes less forgiving. Second, China's economy is again a Europe transmission channel. CNBC reported that China industrial profits growth cooled to the slowest in 7 months as the slowdown deepened. For private investors, this is not an abstract China headline. Watch LVMH, Mercedes-Benz, and Siemens. Luxury, autos, and industrial automation are different businesses, but all three ask the same question. Is China demand stabilizing enough to support European earnings, or is pricing power quietly weakening? Third, software and cybersecurity are becoming an AI-proof screen. CNBC and MarketWatch reported that Salesforce rose after AI growth and an Anthropic investment gain, while CrowdStrike jumped on a record quarter as AI helped cybersecurity demand. Europe's angle is SAP, Dassault Systems, and Deutsche Telekom. The cleaner side is enterprise software, identity, and secure infrastructure if customers keep paying for measurable AI productivity. The pressure side is any company selling AI language without clear adoption, margins, or cyber resilience. Fourth, the macro channel is still alive. MarketWatch reported that Fed Governor Lisa Cook denied mortgage fraud allegations and said President Trump had no grounds to remove her. CNBC reported that the Bank of Korea delivered back-to-back rate hikes as core inflation stayed elevated. For Europe, the direct read-through is banks, bond proxies, and exporters. BNP Paribas, Santander, and UniCredit may like steeper or firmer rates, but policy uncertainty raises the discount rate test for every long-duration growth stock. Energy is not off the board either. CNBC reported that Iran said the U.S. is standing in the way of a Hormuz deal amid talks with Oman, while oil was little changed after Iran said a deal had been reached to share revenue from Hormuz. Today's stock-led watchlist is narrow. AI infrastructure, ASML, ASM International, and B Semiconductor. China cyclicals, LVMH, Mercedes-Benz, and Siemens. Software and secure networks, SAP, Dassault Systems, and Deutsche Telekom banks and rates, BNP Paribas, Santander, and UniCredit. Market bias, selectively constructive, but only where AI spending translates into pricing power and Europe's China exposure does not become an earnings downgrade cycle. Tomorrow's watch is whether Europe rewards AI control points or punishes exporters first as China slowdown headlines meet stretched expectations. Research context only. This is not investment advice, not a recommendation on any security, and not personal financial advice.